What's up, everybody? Michael Silva here, coming from Huntington Beach, California, to do some technical analysis on the S&P 500. We're going to look at the daily time frame, the 30-minute time frame. We're going to map out support, resistance, and kind of get a good look as to where the market will head next. And at the end of the video, I'm just going to share a little best practice with you that really changed my game when it came to trading. Let's get into it. All right, so we are here on the daily time frame. Let's go ahead and zoom in on today's price action. If it's your first time here watching these videos, welcome to the channel. This red rectangle right here we've been calling the bear's camp. That is an area of resistance. This green rectangle down here is an area of support. These purple lines right here is a rising wedge pattern that I drew out quite some time ago, and I've been kind of just following along with it. It did gap down underneath it once and then it kind of moved itself back up. So I just kept the wedge, but you can technically make it more of a channel if you prefer, or you can just keep it as a wedge, whatever you prefer. If you do zoom out actually of this chart, you can use this as a trend line as well from the bottom portion. So from here, the March low, and then you right there where that wedge is, you can technically have a trend line going like this as well. That would be more of a major trend line that the price action has been above. So if a move below that might indicate a bigger move to potentially the downside, maybe even potentially that $3,000 floor to 3080. But for now, I'm just going to keep the rising wedge up. Let's zoom back into this picture. All right, so as you can see what happened today, we had a gap up and a trap down. We gapped up, we moved a little bit higher throughout the day, but ultimately the price came coming down, which we'll get more into on the 30-minute time frame to map out support and resistances. The area of support that we plotted out yesterday was right here. The opening of the bear's camp at 32.35, I think we called it. And the reason why is because that acted as a big area of resistance. And once resistance is broken, it then becomes a support level. So that will be acting still as an area that we want to keep an eye on. This island reversal pattern that we've been talking about back here is no longer an island reversal pattern. It hasn't been ever since the gap really closed and the price continued to move higher. But now that we really closed above that, this pattern no longer is holding true. However, the top of the pattern does still remain true right there at that area of support now that we're going to be keeping an eye on heading into tomorrow and the rest of the week. So the question on everyone's mind right now, is the market going to continue to melt up? Is this going to be kind of a blow off top right here, or are we going to go see the market high and potentially make newer highs? Well, what we've been saying here on the daily time frame is that when the price broke above this island reversal pattern and we have a couple closes above it, it's probably going to get hung up right here around this gap window. Ultimately, the price does, after today's price action, we might get a follow through of more of a down move, but I don't think it's going to be all that strong of a down move. It looks like 3,200 level, maybe just a little bit higher than that. I would say that 3,200 is still going to represent a very strong area of support. As we've been talking about that level in other videos, the price on this kind of last week just could not get below it after it broke above it. And if you look back in the history of the chart as well, if I draw out a horizontal line, you can see these three candles here acted as support. It got hung up obviously right here with the island reversal pattern. And then you see when it broke through, it kind of came back and just about back tested it on this area. So 3,200 seems to be that really solid area. I don't know if we're going to get a pullback to there, but that might present itself as a good opportunity that we've been saying buy the dip, sell the rip. That looks like the strong area to keep an eye on if we do get a pullback. Now, if this rising wedge pattern does hold to be true, we might see a stronger pullback. But the higher this price keeps moving up within this wedge, we might not see some gigantic pullback or some huge pullback to 3,100 or 3,000 in the near future, because there's constantly a new floor being built by the bulls. And then we have this 50-day moving average continuing to move up day by day. The 200 moving average is going to continue to move up day by day, and those are major areas of support. So there's a lot of positive things going on for the bulls, but there are still some very important things to pay attention for the bears. Now, the bearish things that I would like to point out is one, today's price action, it was a gap and trap. It gapped up and closed below the opening. So that is not that great of a move. However, if you look at the price action, for me to be more concerned on this, it would have been nicer to see this red day kind of move more into this candle, because then it would have been more of a bearish sign, because the bears would have made more momentum into yesterday's trading day. We knew that this area is going to have some resistance within it. So what's to happen next? What else is kind of bearish taking place on this chart? I like to point out the divergence that's taking place on the MACD. As you can see from this high right here, it is making a low, and then you go from here, basically the same area, and then it's making a new high. There we go, just like that. So we have basically a high here and a higher high here, and then we have the high here and then a lower high here. That is a negative divergence within the MACD, and these negative divergences are some of the more stronger type of divergences that take place. Now, that doesn't mean that everything's just going to collapse and collide. However, you need to take these type of things into consideration from a bearish perspective. You have a kind of gap and trap candle, okay, on today's price action. You have a negative divergence on the MACD, and you have the price action moving into a big area of resistance. So there are some things that are quite bearish, and yet there's a lot of things that are still bullish. So as far as I see it, this is still a buy the dip, sell the rip type of market. If we get a pullback to that 3,200, that is going to open up for a good opportunity to potentially buy into a pullback. And even actually right here at this 3,235 level, that might potentially hold up too as well. But we got to just play it by ear and wait to see. Let's hop into the 30-minute time frame to map out some support and resistance areas. Okay, we are here on the 30-minute time frame. The day started right here on this kind of big gap up. So we had the gap up, and really the price just went sideways throughout the entire day. And in the last hour or so, that's when we started to see the move to the downside. As far as resistance goes, 32.75 is the level that I will be keeping my eye on. And the reason why clearly is because there's a lot of different data points that it struggled to get above right here at 32.75. Notice the first candle moved up but got rejected. Second candle, same thing. Third candle, same thing. Fourth candle, fifth candle. And then these two candles right down here, or three candles in this little area, really had a struggle to get above that range. So 32.75, if the price can come up tomorrow and start moving up, if it does break that 32.75, I would imagine to see somewhat of a pop up to the next area of resistance. As far as where that might be, I'm just looking at the closing area of that gap window, which we talked about in yesterday's video was about 33.28. That's where that window gets closed. So I'm just kind of keeping my eyesights on that number after this 32.75. This isn't the type of market that I really want to short. Maybe some intraday trades here and there if the setup presents itself, but really as of right now, I'm just not recommending shorting into this type of price action. Yesterday, we mentioned that this candle right here was a wolf in sheep's clothing because we had to move up. Well, we had the continuation gap. We said, you know, you got to wait till the opening of the next day. It would have been nicer to see this type of candle happen midday, because if you see this type of candle happen midday on a run up, then it would be a better opportunity for shorting into that. However, we got that gap up, and still the price managed to come down to close that gap window, and it had support at just about 32.45, and then we saw that bounce up to close at 32.57, right around there for the day. So the resistance that I want to keep my eye on is going to be this 32.75 level. You might technically have some resistance right here as well. Let's call it 32.65. The reason why 32.65 is, just notice these candles in this price action today. It just got held up within this channel. So this top of the channel is going to be resistance because the price action is below it. The bottom channel is going to be resistance because the price action is below it. The next step is to find out where the support is going to be. And honestly, the support that I just want to keep an eye on is going to still be 3,200. That was the one that we saw on the daily. And then I'm just going to say right here at the bottom of this candle, because it looks like when it came down and bounced from this point, a lot of bulls started stepping in to move the price up in a short period of time from 32.47 to 32.57. The 50-day period moving average is still moving up and up. So this means that the 50-day moving average is moving into that bears camp. So we might see a lot of support going forward. So this right here is going to be an area of support, and then I'm going to keep my eye on also this 32.37. That was the entrance into the bears camp. So these are the four levels that I'm going to be keeping an eye on going into tomorrow. All right, so that is all that I have for you on this, and I said I'd leave you with a best practice. Well, as you can see, I'm out here in Huntington Beach, California, and this is a vacation/work trip. I'm just traveling on the job. I work from home at this particular point in time and do these videos as a hobby. And the reason why I wanted to bring this best practice up is because it makes you realize the value of what's actually in your trading account. And the best way to explain this for you is this. When you're maybe at a blackjack table, or if you're playing poker, or if you're gambling and you see the chips on the table, you sometimes lose sight as to what those chips actually represent in dollar terms. And I feel like that could be very well related to trading accounts. So if you have a trading account and you make some money, and then the first thing in your mind is not to take it out to spend it, but to see how you can make more. Well, one of the best practices for me personally was to be able to make money in the stock market, but take it out and actually spend it. And this trip right here is being spent with the money that I made in the market on this small account challenge. As you can see, this screenshot right here is $5,000 from a small account. I turned it from 500 to 5,000. I took a little bit more riskier type trades within a 4-month time frame. I then withdrew that money to reset that account to $500. And then we are out here at this hotel, the Paseo in Huntington Beach. Then we're going to go to the Kimpton, and then we're going to go to Santa Monica to stay at one of these nice little resorts out there. This right here is some sunglasses, kind of cool. Bought some sunglasses. I never treat myself out because I really don't like spending money, to be quite honest. I'm quite frugal, quite cheap. What I want you to understand is that if you see your account, and you make $300 or $400 in the day, take some out and either put it into your long-term investment account or go buy something with it so you can actually physically see that, hey, this is real money. Because sometimes you get some sort of disconnection where you just keep going to make more and more, and the result in that is you can end up with nothing. Like I said, manage your risk, take profits, and know what it feels like. Get that feeling of spending profit that you made from the stock market. It's actually quite wonderful to be able to make a few bucks, take it out, and then go buy something with it. It's pretty neat. All right, that is all I have for you. I will see you on the next S&P 500 technical analysis update. See you later. Dabba dooba dap bop bop bump skibba dibby.